Investors worrying about a pullback. I've been asked about pullbacks, bubbles bursting, the tech bubble bursting. And it's interesting because, why are investors asking this question at this point? We've had markets go higher for a little while now. The market dipped about, well, I wouldn't say a dip, but actually had a big correction, a bear market back in the spring. S&P 500 was down almost 20%. But really, since then, this market has taken off, moved extremely quickly to the upside, making back all the losses we saw in the spring and then some. Well, a lot more after that. And I think that is what has maybe spooked investors a little bit. I think the market has been moving to the upside for maybe 7 months now. And at any point in time, I think individual investors could be questioning, the move, how fast markets have gone up off the April lows. And I think it's just in the last couple of months, investors have been asking themselves, okay, what goes up definitely comes down at some point. So, they've been saying, Allan, when is that market pullback going to happen? Well, my answer is if I had that crystal ball, it'd be a lot easier to manage money and to help individual investors. Unfortunately, we don't have that crystal ball to tell us exactly when the sell-off will happen. However, we do know sell-offs do happen on a regular basis. We know that big ones, bear markets, big market corrections of the 20% or greater variety, they usually happen a couple of times over a 5-year period. Over maybe a 10-year period, you're probably looking at 3 or 4. The 5 to 10% pullback variety, you probably see a few of those every year. And that is actually quite normal and quite healthy. So what I tell individual investors and what I will tell all of you watching today is expect these corrections in the market. Expect the 5 to 10% correction. It will happen. There is no doubt about that. The question is, when is it going to happen? And what can we do at that time, if anything, when it does happen? That is how I believe you should be looking at your portfolio today and managing money today. Don't pull out of the market in fear that a correction or a pullback is going to happen, because you just never know when it will happen. And if it doesn't happen for another 20% higher on the S&P and you were to pull back out of the market today, well, you would leave all those potential gains on the table. Let's enjoy the good times. Let's maximize our gains, and then we'll deal with those pullbacks when they happen. As I said, they will happen at some point. Our first chart shows the S&P 500. Look at that run up since April of this year. And yeah, no wonder why people are starting to become a little concerned with the next pullback, because we've seen such a dramatic run, such a steep increase off the bottom in the springtime. And if you go back even over the last 3 years, look where the market was, let's say 4,000 on S&P 500, and we now are approaching 7,000 on the S&P 500, the largest index in North America. The next chart we have is the Nasdaq. And these are your tech stocks primarily, and we know that tech has led the market, and tech has the tech chart here, the Nasdaq chart here, looks pretty much like the S&P 500 chart. We know technology makes up about, let's say, 35–40% of the S&P. So no wonder why the Nasdaq chart would look similar to the S&P 500. Nasdaq tends to be a little more volatile than the S&P, of course, with the S&P being the largest index and the Nasdaq being more skewed towards tech stocks. So yes, is a pullback going to happen? Absolutely. When will it happen? That is the question we all ask. And we do know that the pullbacks or the down markets, they do happen, but they tend to last a lot less of time. Whereas the bull markets or the good times tend to last longer. Markets go up slower, but last longer as they're moving higher. The negative times or the pullbacks are short, more abrupt, and the markets tend to fall quicker. I've said this on the show many times. Markets take the stairs on the way up and the elevator on the way down. Our next chart clearly shows this, which is a stock market bull and bear cycle. It's hard to see the writing, but I can tell you that the most important thing here is that while bear markets are unavoidable, bull markets are much longer with larger returns. Since 1956, the average bear market has lasted 1 year and 2 months, with a decline of 36%. In contrast, the average bull market lasts 5 years and 9 months, so approximately 5 times longer, and the returns are 192%. You can see here all the different bull markets that are heavily shaded, the lighter shaded areas, the small narrow bars there, all your pullbacks, and obviously the good times are in the heavily shaded areas. So you can see clearly here that why you should be in these markets. You should be in the market because the good times, they last a lot longer. And keep in mind, when people ask me, well, are we going to see a big decline? We just saw one. We just saw one in the springtime. So the odds on having a big decline, so short after are probably not that high. I believe, yes, we will see at some point the garden type variety pullback, as I said, 5-10%, somewhere in between. And, that is healthy. That is healthy for the markets. Our next chart that we can pull up are stock market pullbacks. And here are all the number of pullbacks. You actually see the pullbacks there. And again, hard to see the numbers, but the big one in the middle here, the big bar, that is actually 8 pullbacks. And that was in 2008. And those are 10% pullbacks. So if the market goes down by 10% or greater, that is what's being counted in this chart. I think the most powerful statistic on this chart is the fact that if you look over the last 5 years or so, you're going to see approximately 10 times our market, the S&P 500, has gone down by 10% or greater. 10 times. Yet if you look at the S&P, which is the gold line that is flowing through the chart, you'll see that the S&P just continued to move higher. Yes, it had some small blips along the way, but overall, the S&P continued to move higher. If you go back to 2000 and let's call it 2010, you would see that you have about 17 pullbacks between 2010 to present day of greater than 10%. But once again, the market just continued to power through. The S&P 500 continued to power through all of these. So it's very important for individual investors to stay in the markets. Yes, what I do often is I make changes along the way, perhaps trim some of your profits on some of the stocks that have made you a lot of money. Keep some of the ones, obviously, that are still going to do well going forward. So you're not going to sell out of all of your shares, but then you take some of the profits and move those profits into something else that hasn't moved higher as yet. So you continue to diversify, continue to buy good quality names that are at reasonable prices. And that's how you make money. And that's how you make money even during a difficult time, a pullback of 5 to 10%. Look at that time as an opportunity to buy good quality investments. Our last illustration for this segment, one we've seen before, and it's timing the markets is impossible. And here, again, I wanted to highlight the one stat that I never can get, wrap my head around. It's so difficult to believe that this is true, but it is, that if you were to miss the best 10 days, just 10 days for the stock market, for the S&P 500, over a period of about 30 years, the best 10 days over 30 years, your returns would be 54% less. 54% less. Half the gains are made up in those 10 good days in the market. And the pie chart on the left tells us when those best days are. And usually those best days are during bear markets, during difficult times. So if you're an investor that gets spooked easily and gets out of the market fully, you would be missing some of those best days, some of the greatest days for investors in the market. And if you do that, as I said, your returns significantly decline. So this is evidence, so much evidence there to tell you that you need to stay the course. You need to stay investing. Yes, I'm going to say you need to make some changes at times, but you need to stay in this market. And, as we said off the top of this segment, yes, times will happen or times will come where the market pulls back. Accept it. It is healthy. It happens often, as we've just said. Every year, you're going to have a few of those pullbacks, 5-10%. Understand that they happen so that when they do happen, you're not nervous, and you don't, and your nervousness does not lead you to make an emotional decision with regards to your portfolio.